Hi, it's Dak Hart, stock market strategist, ACI Wealth Advisors, process portfolios with another quick markets and minutes update. Today we're going to have a very quick look at gold, the world outside the United States, which is really representative of developed markets like Europe and so on, and the US dollar. For those of you that might like to learn a little bit about my firm or myself, just visit dakhartstock.com/about or aciwealth.com/about. So what we're looking at here is kind of the last couple of years in gold, and it doesn't really look too bad. You know, we saw a nice big rally here in 2016. Some of you may remember there's a lot of media commentary and a lot of billionaires talking about how you have to own gold and so on and so forth. And so we got a big rally out of that. And of course, what happened, at least what I think almost always happens with gold, is the billionaires kind of push it up. They talk about how you need to be invested in it, and then they sell it. And so that's kind of what we saw happen in 2016. And what we see here over the last few weeks is what I would consider a counter trend rally, just like most of what happened in 2016 was a counter trend rally. And all that means is that the overall trend for gold at this point appears to be down. And whenever you see it rise up, that's going against the main trend. So that's all that means. It's not really meant to be jargon. And the reason for that is, if we look at a little bit bigger time frame with gold, we can see that's really exactly what's happening. For several years, it's been steadily losing value, and then you get these rallies in between where it kind of moves up a little bit, and then it gets sold off, and that just continues to happen. Now, what's maybe a little bit different moving forward with gold is that this pattern we're seeing right now is a little bit different, because this may be what's called a higher low. And I think that gives gold the possibility to maybe establish a range, which means I don't know if it'll drop much below $1,000 an ounce for the near future. I don't think it's going to get much above 1350 an ounce, 1,350. More likely we'll see it kind of bang around in this zone between maybe 1100 and 1250. That's my viewpoint at this juncture, and that's because gold really only gets bought when there's a kind of a fear trade, when people are afraid of things. And I think that the new administration in the United States is something that some people are concerned about, that there's a little fear about what may or may not happen. There's some unknowns. So that's why I'm saying gold may be in a position where it can establish a range for a while, rather than following the pattern in the last few years and having a rally and then selling off aggressively for the next year or two. So we'll see how that plays out in the coming weeks. Let's have a look at the world. Outside the U.S., this is not bad looking. We see that for the last several years the world has rallied, and this is developed markets, like I said, Europe. You got a little bit of China in there, which is arguably a developed market at this point, or close to it. However, what we've seen since 2014, it's begun selling off, and we've seen a lot of volatility, a lot of very big moves. And in the near term, it kind of looks like it's trying to stabilize. But that being said, those of you that have seen these before know that I just think Europe's bitten off more than it can really chew in terms of pushing its economy forward, advancing its economy, and being more and more productive. I think they've got a real problem with the refugees that they've let in, and I'm not going to take a moral stand on it either way. I just think that that's going to be a pretty serious impediment to them putting resources towards economic growth and productivity and some of the things that can really drive the markets. And Europe is the largest representation in the world stock markets outside the United States. Of course, you have Japan and Hong Kong and so on and so forth. But I think they've got some real problems. Japan is still stuck in deflation, so I don't see them being a huge driver of the world stock market. So those that know me know I really don't like to invest outside the U.S. When we have a situation where you have the most stable market in the world that now has rising interest rates, has an administration and a Congress and a Senate that's focused on growth, and Republicans historically, whichever way you want to look at it, have traditionally been associated with growth, I think you're going to see a lot of the money come into the United States markets, when it doesn't really have a place to go, because it's a safer place if you've got a pile of money and you want to invest it. And I think a lot of the world is aware of that. Let's move on to the dollar here. Okay, so what we've seen here is over the last couple of years, the dollar was fairly stable, 2012, 2013, and then we begin to see a big run up, and that's the anticipation of rates rising. And we've had a lot of dollar strength recently, The last update, I believe I said something that it can't go but so far before it can begin to affect earnings on a negative basis. And what that means is the United States has got some very big companies, multinationals, that have operations overseas. And if the dollar gets too strong, then that has the net effect of making the other currencies where they're having their earnings in weaker, which means their earnings globally from the standpoint of the measuring stick of the US dollar, which is how their earnings are reported here in the US, they look weaker than maybe they would be without what's called a currency headwind. That just means the dollar's gotten so strong it makes earnings abroad look weaker because of the exchange rates. So what I'm hoping we're going to see is a bit of a pullback in the dollar. I'd really like to see it get back down into, maybe the 97, maybe even down in this 94 range. In a rising rate environment, I'm not sure how likely that is, particularly given some of the issues in the world outside the US. So, it could be we'll see dollar strength continue to advance, and that at some point is going to be a trigger for the markets in that it will affect earnings in a negative way. So we're just going to need to see how the story plays out. I'm hoping for some stabilization in the dollar. I do think over time that the dollar may end up stronger than it is currently. So not an advocate of buying the dollar here if you're into currencies, but certainly it's something to watch. So that's the presentation for today. If you have any questions, you may obviously get in touch. Thank you very much for your time. There's my email right down at the bottom if somebody wants to shoot me a note with some more questions. And otherwise, I'll see you next time. Thanks.